Hello, everybody. Welcome to Collateral Investments. Today is April 4th, 2025. So in the last 2 days, the stock market has a very big drop. If you are borrowing money using stock-backed loan, you may be worried about getting wiped out if the stock market continue to drop. So today, let's discuss the maintenance margin and how do we calculate how much we can borrow. So let's first review what is maintenance margin and how it is calculated. So basically, your total account value is called net liquidation value, which means if you sell everything in your stock account, how much you can get. And your net liquidation value should never drop below its maintenance margin. And the maintenance margin is calculated based on what's in your stock account. So for example, if you have Nasdaq 100 ETF, it would be 10% of your NLV. And if you have S&P 500 ETF, it would be 9%. Because S&P 500 is considered to be a little safer than Nasdaq 100. And if you borrow too much money, then your NRV is less than your maintenance margin. Then, if you are using interactive broker, it will randomly pick some of your positions and sell them. So this is very, very bad. We should avoid it at all cost. Or if you're at other brokers which charge a much higher maintenance margin, like 30%, they would give you a margin call and they give you time for you to deposit money into your account so that you can meet the margin call and maintain the NLV to be above their maintenance margin. So I will still use interactive brokers 10% as an example. If you have $1 million QQQ, which is Nasdaq 100 ETF, your maintenance margin would be about 100K, which is 10%. Okay, so still using this example, let's calculate how much you can borrow from the stock-backed loan. So let's assume you have $1 million and it's in Nasdaq 100. The maintenance margin is 100K or 10%. Assume we borrow 15% of the original value, which is 150K. So now look at the picture on the right. You have excess liquidity, which means it's 90% of the $1 million account minus the account you have just borrowed. So because your excess liquidity is bigger than zero, then you're safe. So this is also often called the margin cushion. But if stock market drops a lot, so your $1 million account drops down to 166.7K. This is a huge drop of 83.3%. Okay, so at that time, the maintenance margin of this account would be 16.7K, which is 10% of 166K. So now you still borrow the same amount because you never returned that money, which is 150K. And then the excess liquidity would be your NLV times 90% and minus the amount you borrowed, which is zero because your NLV times 90% is 150K. So at this point, you are borrowing to the max. So we can see that the more the stock account drops, the less you can borrow. If you borrow 150K, you can tolerate a market drop of up to 83.3%. So basically, the max borrow can be calculated from the minimum NLV, which is after the stock market drops by 83.3%. Then this amount times 1 minus the margin rate, or this amount, the minimum NLV times 90%, because for your QQQ or QQQM, the margin rate would be 10%. Okay, so let's look at again how to calculate the max amount to borrow. So we need to first calculate the minimum NRV, which depends on the maximum drawdown. What is a drawdown? Drawdown means by how much the account has dropped from its previous peak. So from the peak NRV, if it has a drawdown of 80%, then the mean NRV would be 20% of the peak NRV. Okay, so you pick the peak NRV in the previous. You do not need to pick the current NRV. And then once you know your minimum NRV, the max borrow can be calculated by this formula. It is the minimum NRV times 1 minus the margin rate, which is 10%. Okay, so if we allow you to borrow 15%, remember I always recommend you to not borrow more than 15% of your account value, which I was assuming it's peak NRV. To be more accurate, it's not your account value, it should be the peak NRV. And then the minimum NRV would be the maximum account divided by 1 minus the 10% margin rate based on the previous formula. So in the end, you can calculate that the minimum NRV would be 16.7% of peak NRV, which means you can allow the account drop by 83.3%, which is the max drawdown. So the max drawdown can be calculated by 1 minus the ratio between minimum NRV divided by peak NRV, which is 83.3%. Okay, so I keep seeing the 83.3%, which is the value that we allow the US index to drop if you borrow 15% of the peak NRV. But how likely is this to happen? So this is a formula. We come up with a value. And max borrow equal to mean NRV times 1 minus margin rate. So if we look at the history, S&P 500 got the max drawdown in the Great Depression around 100 years ago. And that max drawdown is about 86%. And because the margin rate of S&P 500 is 9%, the max borrow using the formula above can be calculated to 12.7% of NRV, which is pretty close to the 15%. So if you did borrow 15% 100 years ago during Great Depression, you would be in trouble because it's a few more percent higher than what this max drawdown would allow. But if you look at Nasdaq 100, the max drawdown happened in the dot-com bubble and 2000, and that drawdown is about 83%. So the margin rate is 10%, and the max amount you can borrow can be calculated using the same formula, and you get 15.3%. And these days, in general, we consider S&P 500 to be less risky than Nasdaq 100. So if we assume Nasdaq 100 max drawdown is 83% in the near future, then borrowing 15% for Nasdaq 100 would be safe. And borrowing also 15% for S&P 500 would also be safe because people these days believe S&P 500 is safer than Nasdaq 100 and it would have a less drawdown compared to Nasdaq 100. So that's why I recommend you to not borrow 15% of your peak stock index portfolio. Remember, it's stock index. I'm using S&P 500 or Nasdaq 100. If you have a single stock, it's a totally different formula and it's a much higher risk. So that's not in the scope of this talk. But if you have stock index, then I believe 15% is a pretty safe bet if you have to borrow. And by the way, our channel has a Telegram group. If you're interested, you can join and we can discuss topics related to investments. It also has a pointer to join the WeChat Chinese group if you speak and write Chinese. Okay, that's all for today. Thank you.